Friends, thanks for being here today. This morning, my net worth was about $2,300,000,000 and 0 cents. Now, that's not because I'm any smarter than anyone else. It's not because I put in more hours. It's definitely not because I hit some lottery with a tech stock or inherited a fortune. My worth is in the billions for one reason. 50 years ago, I stumbled onto 7 mental tricks that fundamentally rewired how my brain handles decisions. And here's the part that might make you upset. I could have taught these exact same tricks to you when you were 12 years old. They really are that simple, but nobody showed you. Because of that, you've likely been making every financial decision using a broken operating system for your entire life. Let me prove it. Just think back to the last big money decision you made. Maybe it was buying a car, picking a new job, or making an investment, doesn't matter what. I am willing to bet you made that decision the way 95% of people do. You looked at what seemed good, what felt right, and what your gut told you to do. That right there is exactly why you haven't built the wealth you want. Your gut, when it comes to money, is an idiot. Your instincts about finance are fundamentally wrong. The 7 tricks I'm about to walk you through will pull back the curtain and show you exactly why your own mind has been quietly sabotaging your wealth for years, all without you ever noticing. And if you're tired of putting in all the work but still staying broke, pay close attention, because we're about to reprogram the way you think about every single money decision for the rest of your life. I'll give you a fair warning. This is probably going to make you uncomfortable. You're going to realize that you've been doing almost everything completely backward. But that feeling, that discomfort, that's just your brain upgrading. That's the feeling of wealth creation finally starting to click. Here's the thing most people never figure out. Getting rich isn't really about finding the one perfect investment, or starting the perfect business, or landing the perfect job. Those are just the results. I'm focused on the inputs, the daily thinking patterns that create those results. Every single morning, wealthy people wake up and run their minds through 7 specific mental processes that people struggling with money never use. It's not because we're special. It's because we learned a different operating system. And starting right now, you're going to learn it too. This isn't motivational fluff. This isn't some vague principle like think positive or believe in yourself. These are specific mechanical thinking patterns used by every self-made billionaire I've ever known. The big names, the ones you've heard of, they all use them. Every successful person you can think of runs these exact same mental programs, often without even realizing it anymore because they've just become automatic. By the time we're done, they'll be automatic for you too. But first, I need to show you why your current thinking patterns have been keeping you poor. Right now, your brain makes financial decisions based on emotion, on social pressure, on short-term gratification, and by just copying what everyone around you is doing. This is totally normal. This is how 95% of humans operate. It's also why 95% of humans never build any significant wealth. Your brain evolved over millions of years to help you survive, not to get you rich. The mental shortcuts that kept your ancestors alive in the wilderness, things like avoid loss at all costs, copy what the tribe is doing, grab rewards immediately, trust your gut feelings, those exact same shortcuts will destroy your wealth in the modern world. You are running caveman software in a digital economy, and it's costing you millions of dollars over your lifetime. The 7 tricks I'm about to teach you are designed specifically to override those broken instincts and replace them with thinking patterns that actually create wealth. Some of them will feel unnatural. Some will seem counterintuitive. Some will go against everything you've ever been taught. Good, that's how you know they're working. If building wealth felt natural and comfortable, everyone would be rich. The fact that it feels weird and uncomfortable is exactly why most people never do it. You're about to become one of the few who does. Let's start with the first mind trick. And I'm warning you, this one is going to flip your brain completely inside out. It's called inversion thinking, and it is the single most powerful mental tool I have used in 70 years of building wealth. Here's how it works. Instead of asking, how do I get rich, which is what everyone asks, you ask the opposite question, what guarantees I stay poor? Instead of just seeking success, you actively identify and avoid failure. This sounds backward. It sounds like negative thinking, and it is the exact opposite of what every self-help guru tells you. It is also responsible for more of my wealth than any other thinking pattern I've ever used. Let me show you why this works so much better than positive thinking. Let's imagine you want to build $1 million investment portfolio. Most people ask, what's the best investment that'll make me a millionaire? So they chase hot stocks, they listen to tips, they follow the gurus, they try to find the next Apple or Amazon. And they lose money every single time. You know why? Because that question, what's the best investment, is impossible to answer. Nobody knows. It's just guessing. It's gambling. Now, watch what happens when you use inversion. Instead of asking, what's the best investment, you ask, what guarantees I lose money? Suddenly, the answer becomes crystal clear. Buying things you don't understand. Investing in businesses that have no profits, following hot tips from people who aren't rich themselves, selling in a panic when prices drop, paying high fees to fund managers who can't even beat the market, trying to time the market, buying on margin, investing money you need in the short term. These behaviors guarantee you will lose money. Every single one of them is provable, documented, and certain. So, if you simply avoid these guaranteed to fail behaviors, you will beat 90% of investors without ever doing anything particularly smart. You just stop doing stupid things. This is the secret wealthy people know but never talk about. Wealth isn't built by being brilliant. It is built by not being stupid. Every disaster I've avoided, every catastrophic loss that never happened, every financial crisis I sailed right through untouched. All of it came from asking one simple question before every decision. What is the dumbest possible thing I could do right now? Then I made absolutely certain I didn't do that thing. That is it. That's the whole trick. And it has made me billions of dollars because while everyone else was busy chasing brilliance, I was busy avoiding stupidity. You can start using this today, right now, this very minute. Whatever financial decision you are facing, stop asking what the best choice is. Start asking what choice would guarantee this fails. Make a list. Write down every stupid decision you could possibly make in this situation. Then, simply do not do any of those things. What's left over might not be perfect, but it will not be catastrophically wrong. And over time, not being catastrophically wrong compounds into extraordinary wealth. This is trick number one. And honestly, if you stop listening right now and only use this one pattern for the rest of your life, you would be wealthier than 90% of people. But we are just getting started. The second mind trick wealthy people use every single day is something I call the circle of competence. And violating this rule is the number one reason smart people stay broke. Here is the brutal truth. You do not know as much as you think you know. And the gap between what you think you understand and what you actually understand is where all your money disappears. Rich people know exactly what they know, and more importantly, we know exactly what we do not know, and we refuse, absolutely refuse, to bet money outside our circle of true understanding. Let me hit you with a real example that'll make this perfectly clear. In the late 1990s, everyone I knew was getting rich from tech stocks. Companies with no revenue, no profits, no real business, just websites and promises were going up 500%, 1,000%, 2,000%. People who knew nothing about technology, nothing about business, nothing about valuation, they were making millions. And they all thought I was an idiot for sitting it out. My friends mocked me. The media called me outdated. But here's the thing. I did not understand those businesses. I couldn't explain how they made money because they didn't make money. I couldn't value them because there was nothing to value. They were outside my circle of competence. So I didn't invest, I looked like an idiot right up until the crash came. Then, everyone who had been getting rich lost everything. And I still had all my money, because I never betted on things I didn't understand. This is the difference between wealthy people and broke people. We are honest about what we do not know. Most people aren't. They hear about crypto, they throw money at it without understanding the blockchain. They hear about a hot stock, they buy it without reading a single financial statement. They invest in a friend's startup without understanding the business model. They are gambling, calling it investing, and then wondering why they keep losing. It is because they are operating outside their circle of competence, and the market punishes that mistake without mercy. Here is how you apply this starting immediately. Grab a piece of paper right now. Pause this if you need to, and write down 3 things you genuinely, deeply understand. Not things you've heard about, not things you find interesting, but things you could teach a college course about. Maybe it's your specific industry. Maybe it's real estate because you've bought 5 properties. Maybe it's a particular type of business you have worked in for 15 years. These are your circles of competence. From this moment forward, you only invest money in opportunities that fall inside these circles. Everything else, no matter how exciting, how profitable everyone says it is, how much FOMO you feel, you pass. You let other people get rich, you stay in your lane. This will be one of the hardest rules you ever follow because you will watch opportunities pass by that make other people wealthy. You will feel stupid. You will question yourself. But here is what you will not do. You will not lose everything by betting on things you do not understand. And over decades, the money you do not lose by staying in your circle will compound into more wealth than you could ever make by gambling outside it. Rich people use this trick every single day because we learned the expensive way that stepping outside your circle of competence is how you go broke fast. Stay inside it, and you build wealth slowly, but certainly. That is trick number 2. Now, let me show you the third mind trick. And this one is probably costing you more money than everything else combined. It's called opportunity cost, and most people have never even heard of it. Here is the concept in one sentence. Every time you spend $1, you are not just losing that dollar, you are losing every dollar that dollar could have become. And if you do not understand that difference, you are hemorrhaging future wealth every single day without even knowing it. Let me make this painfully concrete. You have $20,000 sitting in your savings account. You are thinking about buying a new car because your current one is a few years old and you want something nicer. Can you afford the car? Sure, you have the cash. Most people stop thinking right there. They have the money, they want the thing, they buy it. Transaction complete. Except, here's what they just did. They did not spend $20,000. They spent $271,841. Let me show you the math. And this is going to hurt. That $20,000, if invested in a basic index fund earning average market returns of 8% per year, becomes $43,178 in 10 years. $93,219 in 20 years, $200,963 in 30 years, $431,534. But wait, it gets worse, because you are not just investing $20,000 once. If you had kept that money, invested it, and added just $200 per month, the rough equivalent of a car payment that grows to $1,100,000 over 40 years. So when you bought that car, you did not spend $20,000. You spent your chance at becoming a millionaire. That is opportunity cost. That is what rich people see that you do not. This is why wealthy people are so careful with money. It's not because we are cheap, but because we see the invisible price tag attached to everything. Before I spend money on anything, I run a calculation in my head. What is this really costing me in future wealth? Sometimes I still buy the thing. Sometimes the value I am getting is worth more than the compound interest I am giving up. But I make that choice consciously with full knowledge of what I am trading away. Most people never run this calculation. They see a price tag and think that is the cost. It is not. The cost is what that money would become if you invested it instead. Here is your new rule. Starting today, before you spend more than $500 on anything, calculate what that money becomes in 20 years at 8% growth. Write down that number. Look at it. Then ask yourself, is this purchase worth giving up that future amount? Sometimes the answer will be yes. You need a reliable car. You need to fix your roof. You need tools for your business. But most of the time, once you see the true cost, you will realize you are trading enormous future wealth for things you barely care about. This one mental shift, seeing opportunity cost instead of just price, will save you hundreds of thousands of dollars over your lifetime. Rich people do this math unconsciously every single day, because we know every dollar has two lives, the life it lives today and the life it could live in the future if you let it compound. Poor people only see the first life. That is why they stay poor. All right, let's get to trick number 4. And I need you to pay close attention here because this one is going to feel uncomfortable. It is about overcoming loss aversion bias. And it is the reason most people cannot build wealth, even when they are making good money. Here is what loss aversion means. Psychologically, losing $1,000 hurts about twice as much as gaining $1,000 feels good. Your brain is hardwired to avoid losses more than it is to seek gains. And this hardwiring, which helped your ancestors survive, is destroying your financial future every single day. Let me show you exactly how this plays out. You invest $5,000 in a stock. It goes up to $8,000. You feel great. So, you sell, locking in your $3,000 profit because you are afraid it might go back down. Smart move, right? No, it is a terrible move. Because what you just taught your brain is, take small profits quickly to avoid a potential loss. Now, same scenario, different outcome. You invest $5,000 and it drops to $3,000. You have lost $2,000. But instead of selling, you hold on to it because selling means admitting you were wrong. It means locking in a real loss. So you hold, hoping it comes back, and it keeps dropping. This is loss aversion destroying your wealth. You sold your winner too early, and you held your loser too long. And if you are honest with yourself, you have done this exact thing multiple times. Wealthy people train ourselves to do the exact opposite, and it goes against every natural instinct you have. When we realize we made a mistake, bought something that is going down, we sell immediately. That day, that hour. We do not care that it means admitting we were wrong. We do not care that it locks in a loss, because we understand something crucial. The money you have already lost is gone. It does not matter. The only thing that matters is what you do with your money from this point forward. Holding on to a losing investment because you do not want to admit you were wrong is letting your ego cost you money. That is stupid. And rich people refuse to be stupid just to protect our feelings. On the flip side, when we have got a winning investment, we hold it for years, for decades, even through the ups and downs and scary moments. We do not sell just because it went up. We let it compound. This is how wealth actually builds. But your loss-averse brain will fight you on this every step of the way. It will scream at you to sell the winner and hold the loser. You have to override those instincts consciously, forcefully, every single time. Here is your new rule. Every time you are making a decision about an existing investment, pretend someone else made the initial decision, not you. If your friend came to you and said, "I bought this stock at $5,000. It is now worth $3,000. Should I hold it?" You would say, sell it immediately. Why? Because it is not your mistake. So you are not emotionally attached to being right. Do this with your own money. Before every decision, ask yourself, if I did not already own this, would I buy it today at the current price? If the answer is no, Sell it today, right now. This removes your ego from the equation and lets you make decisions based on what is best times forward asterisk, not what makes you feel better about your past. Rich people practice this every single day because emotional attachment to past decisions is the fastest way to stay broke forever. The fifth mind trick is thinking in probabilities instead of certainties, and this shift alone will put you ahead of 95% of people. Here is what I mean. Broke people think in black and white. This will work, or it won't. This is good, or this is bad. I am right, or I am wrong. It is all or nothing thinking, and it is killing your wealth. Rich people think in percentages. This has a 60% chance of working. That has a 30% probability. This decision increases my odds by 10%. Everything is a calculation. Nothing is certain. And we make decisions based on tilting probabilities in our favor over time, not on demanding impossible certainty before we act. Let me show you why this matters so much with a concrete example. You are thinking about starting a business. Broke person thinking asks, will this succeed? That question demands a yes or no answer. It demands certainty. And since nobody can guarantee success, you never start. You are paralyzed by the need for certainty in an uncertain world. Rich person thinking asks, based on my knowledge and research, what is the probability this succeeds? Maybe 40%. What could I do to increase that to 50% or to 60%? Now you are working with reality. Now you are thinking about improving your odds instead of demanding guarantees. This is how I have made every major decision for 7 decades. I never ask, will this work? Because that is an impossible question. I ask, what is my probability of success? And is that probability good enough given the potential upside and downside? Sometimes a 30% chance is worth taking if the potential gain is enormous and the potential loss is limited. Sometimes a 70% chance is not worth it if the reward is tiny and the risk is catastrophic. It is all math. It is all probabilities. It is never certainty. Here is how you rewire your brain starting today. Stop using certainty language. Stop saying, this will definitely work, or that is definitely a bad idea. Start assigning probabilities. I think this has about a 65% chance of success. That probably has a 20% chance of working. Force yourself to put numbers on your predictions. Track them. See if you are calibrated correctly. Over time, you will get better at estimating probabilities. Your predictions will become sharper. But more importantly, you will stop demanding impossible certainty before you act. You will start making decisions based on favorable odds, taking action even when success is not guaranteed. And that is how wealth gets built, by taking intelligent risks with favorable probabilities over and over until the math works in your favor. Rich people do this unconsciously every single day because we know certainty is an illusion and probability is reality. The sixth trick wealthy people use daily is the checklist method. And I know what you're thinking. A checklist? That is your big secret? Yes, because your brain is unreliable, especially when you are excited or afraid or under pressure. A checklist forces you to think through critical questions before making a decision, even when your emotions are screaming at you to act fast. This simple tool has prevented more financial disasters for me than anything else I have ever used. I have been using investment checklists for 50 years. Before I invest in any company, I go through the exact same questions every single time. Do I understand how this business makes money? Does it have a competitive advantage that will last? Is the management honest and capable? Is the price reasonable? Would I be comfortable holding this for 10 years? Can I explain this business to a child? These questions force me to slow down and think when my brain wants to get excited and move fast. Every time I have violated my own checklist because I thought something was special, I have regretted it. Every single time. When I follow the checklist, I avoid disasters. Here is the trick. You have to create the checklist before you are in the heat of the moment. When you are excited about an opportunity, your brain will rationalize anything. It will skip important questions. It will convince you that this time is different. A pre-made checklist prevents this. It is your defense against your own worst instincts. Before you buy a house, before you change jobs, before you make any major financial decision, pull out your checklist and make yourself answer every question honestly. If you cannot, you do not proceed. Period. The seventh and final mind trick is emotional detachment from short-term outcomes. And this might be the hardest one to master, but it is also one of the most valuable. Here is what it means. Wealthy people do not get excited when things go well in the short term, and we do not panic when things go badly. We stay emotionally flat. We stay focused on the long-term process, not the daily or weekly or monthly results. This is incredibly hard because your brain wants to react to everything immediately. Let me give you the perfect example. The stock market drops 20% in a month. Your portfolio loses $100,000. What do most people do? They panic. They sell. They lock in losses because they cannot handle the emotional pain of watching their wealth disappear. What do rich people do? Nothing. We do not even check our portfolios because we know that short-term volatility is noise, not signal. We know that if we are invested in good businesses at reasonable prices, temporary drops do not matter. In fact, they are buying opportunities. The same thing happens in reverse. The market goes up 30%, everyone is getting rich. Your friends are bragging about their gains. Your portfolio goes up $150,000. What do most people do? They get cocky. They start taking bigger risks. They think they are geniuses. What do rich people do? Nothing. We do not get excited. We know that short-term gains do not mean we are smart. They mean we got lucky with market timing. We stay humble, stay cautious, and stick to our process. This emotional flatness, not reacting to short-term wins or losses, is one of the most valuable skills you can develop. It prevents you from selling in a panic and buying in greed, which is how most people destroy wealth. The way you build this skill is simple, but it is not easy. Stop checking your investments constantly. Stop reading financial news. Stop comparing your returns to your friends. Focus on your process. Are you following your principles, your checklist, your strategy? Let the results take care of themselves over years and decades. These 7 tricks, inversion thinking, circle of competence, opportunity cost, overcoming loss aversion, probabilistic thinking, checklists, and emotional detachment. These are the thinking patterns that separate wealthy people from everyone else. They are not complicated. They are not secret. They are just different from how most people's brains naturally work. And that difference, compounded over decades, is worth millions of dollars. You can start using all 7 of these today, right now. They do not cost money. They do not require special education. They just require you to think differently. And if you do, if you actually implement these patterns instead of just nodding along and forgetting them tomorrow, your financial life will transform completely. Not overnight, not in a month, but over years. These tricks will rewire how you make every decision. And those better decisions will compound into wealth you cannot even imagine right now. That is how I've built billions. Not by being smarter than you, but by thinking differently than you. Now, I've given you the 7 core components of the operating system, but just having the software isn't enough. You have to run it, and you have to let it run for a long, long time. This brings me to what I consider the 8th wonder of the world, and perhaps the most difficult trick for the modern brain to accept, the power of compounding patience. We touched on it with opportunity cost, but I want to isolate it. People drastically overestimate what they can do in 1 year and just as drastically underestimate what they can do in 20 years. Your caveman brain is not built for this. It wants the reward now. It sees someone get rich in 6 months on a lucky bet and wants to copy that, not the person who got rich over 60 years by saving and investing consistently. Every time you plant a seed, your instinct is to dig it up the next day to see if it's growing. You have to fight that. Wealth is not a sprint. It is not even a marathon. It is a garden you tend to every day for decades. When you invest that $200 instead of spending it, you've planted a seed. You don't see the result. The next day, it's still just $200. It might even be $199. It feels useless. This is where 99% of people fail. They stop. They dig up the seed. The wealthy person, running the new operating system, understands that the growth is invisible at first, but it is mathematical. They trust the process over the short-term results. That's trick 7 in action. But they combine it with the boring, unsexy, decades-long virtue of patience. My wealth wasn't built in a day. It was built over 50 years. One good decision at a time, one stupid decision avoided at a time, compounded by time. Another thing that this operating system requires is a different relationship with people. This is a sensitive one, but it's critical. Your brain is wired to copy the tribe. Trick number 2, the circle of competence, is about trusting your own understanding over the tribe's excitement. But this goes deeper. You must consciously manage your inputs. And the most powerful inputs you have are the people you associate with. If you are in a boat with 5 people who are all drilling holes in the bottom, it does not matter how hard you bail water, you are going to sink. If you spend all your time with people who make decisions based on emotion, who chase hot tips, who buy things they can't afford to impress people they don't like, you will become like them. Your caveman brain will override your new software because the need to belong is stronger than the desire to be rich. You must, and I mean must, find a new tribe. Find people who are running the same operating system. People who talk about opportunity cost. People who ask, what's the dumbest thing we could do here? People who are comfortable saying, I don't understand that, so I'm not investing. This might mean spending less time with friends or family. It might feel lonely. But you cannot run the wealth operating system when your environment is constantly trying to reinstall the broke operating system. So, practice these 7 tricks. But practice them inside a fortress of patience and surround that fortress with people who are building, not drilling holes. Do that, and the results are not just probable. They are, over a long enough timeline, almost inevitable.